Hello Baker investment students. We are approaching the end of the course. We only have 3 weeks left, so weeks 5, 6, and 7. Week 5 here, you're going to read chapter 7, 8, and 9. You're going to have the Otis simulation. I've given you some more money and enabled mutual fund exchange trading funds. So I want you to go out there and follow the directions and buy, I think I said about 2 mutual funds and exchange traded funds, and your forum discussion will be based on letting the class know what you bought and why you bought it, and some your own personal experiences with mutual funds or exchange traded funds that you bought. So stay on top of things this week. Try to get it done early as far as the Otis trades and the forum discussion. That way we'll give you a little bit more time to work on the homework problems and the paper that you have due at the end of that week. Well, this week in looking at this and analyzing common stocks, chapter 7 kind of starts off the idea of top-down approach. You first want to look at the economy. The economy is doing well, then probably the market's going to do well. The markets right now, during our class, are doing tremendously well because there's a lot of optimism, at least the hopes of the future for the economy. Whether that happens or not, we'll wait and see. Right now it's been a pretty strong bull market. Also next, you look at the industry itself. How is that industry doing in this economy? And then specifically last, you look at the firm. And this is where the rest of this chapter kind of gets more into a lot of those fundamentals that you may have seen in previous accounting, finance courses, looking at all the financial ratios, and now try to analyze, how is the company doing? One of the things I want to point out and stress, though, that a company may have very strong fundamentals, really good performance, but it really begs the question whether the price in the market right now is a good price to go in and buy that stock. Is it overvalued or undervalued? And that's what a lot of this course discusses. And even looking at the fundamentals, you have to determine, is this what is my intrinsic value based on some future cash flows or some other valuation models that are addressed in chapter 7 or 8. And if so, if you believe that the stock is undervalued, that'd be a good opportunity to buy. But it might be a great company, but it might be overvalued in the market. So just like we had our discussion at Facebook last week, it's hard to say what's going to happen in the future with Facebook. It might be overpriced right now, or somebody might feel it's underpriced. So it's a big part of making money on stocks. One is the dividends, but the capital gain is the bigger part. So you're going to look through a lot of these, different things that you may have seen before in finance, but a little bit more detail now. Some of these stock valuation models in 7 and 8. The last thing in chapter 9 I kind of want to point out, because this deals with market efficiency, and you've learned about this in finance before, but Eugene Fama came up with the concept of the efficient market hypothesis. And kind of economics, if the markets are rational and any information that's available to us is accurately reflected, the price is going to adjust immediately. If markets are irrational, they seem to be based on psychology or emotion, and kind of the fundamental side says no, there can't be any emotion out there, but there's also a behavioral economic side that says yeah, we believe that there is emotion in the markets. And even right now we see record gains in the market. Is this based more on emotion? Is there something fundamentally different from 1 month ago that the market should increase so much? It's been really good for our portfolios. We've made some money over this time period for most of us in the class. But you'll go through and review a little bit about that hypothesis. And from the academic side, we tend to stick more with the fundamental analysis. You got to do all these ratios, look at the financial performance, the management of the company. But one thing that we have to look at and address is technical analysis. And if you truly believe in efficient markets, you'd say technical analysis is baloney. But there's enough people that follow this that we have to pay attention to it. So from page 335 to the rest of the chapter, it deals with all these different techniques looking for patterns within a stock price or the market to determine this is a good time to buy or a good time to sell. Again, if markets are efficient, you can't, even a weak form efficiency says you can't use past price information to determine the future. But technical analysis kind of ignores that. It says, hey, I can see patterns in these things in the market, and there's all kinds of different things that maybe traders look at to try to say, maybe this price of the stock is ready to move up, or no, it's time to sell this stock because of certain movements that I see or behaviors happening in the market when I chart these things. Okay, well that's it for this week. Again, send me an email if you have any questions, but otherwise have a great week. We'll talk to you soon.